Let me tell you about a magic trick. Not the rabbit in a hat kind. The kind where trillions of dollars disappear, and somehow everybody still claps. In 2023, NVIDIA stock went up 239%. In 2024, it went up another 171%. And by July 2025, NVIDIA became the first company in history to reach a $4 trillion market cap. $4 trillion. That's more than the entire GDP of Germany. More than every company in Japan combined. And your group chat? Definitely talking about buying it. So here's the question nobody is actually answering. Is this the greatest technological revolution of our lifetime, or is it the biggest bubble the world has ever seen? And more importantly, if it pops, who loses? Spoiler alert, it's probably not the people selling you the hype. What is actually happening? Let's start with the basics. AI, artificial intelligence, is real. It works. ChatGPT has 400 million weekly active users. Companies are using it to write code, design products, answer customer calls, and generate entire marketing campaigns. That part is not fake, but here's where it gets interesting. To run AI, you need chips, specifically a type of chip called the GPU, a graphics processing unit, and right now one company makes the best GPUs in the world, NVIDIA. So as every company on Earth panicked about not having enough AI infrastructure, they all ran to buy NVIDIA chips. Demand exploded. NVIDIA's revenue went up tenfold in just 2 years. And investors noticed. Money flooded in. Not just into NVIDIA, into every company that had the word AI anywhere near its name. Microsoft, Google, Amazon, Meta. A company called CoreWeave that used to mine Bitcoin and pivoted to data centers overnight. The market went absolutely wild. And here is the thing about markets going wild. Sometimes they are pricing in real future value, and sometimes they are just going wild. The question is, which one is this? The numbers that should make you nervous. Let me give you some numbers, real ones. Number 1, concentration. By late 2025, the 5 largest companies in America held 30% of the entire S&P 500. 3 of those 5, NVIDIA, Apple, and Microsoft, alone make up 21% of the S&P 500. That's 3 companies out of 500. Think about what that means. If those 3 stocks sneeze, the entire market catches a cold. Number 2, the circular money problem. Here's a deal that happened in 2025. NVIDIA, the chip company, invested $100 billion into OpenAI. Then OpenAI used that money to buy NVIDIA chips. NVIDIA essentially paid OpenAI to be its customer, and that purchase showed up as real revenue on NVIDIA's books. Michael Burry, the guy who bet against the housing market in 2008 and won, called this out directly. He said, "True end demand is ridiculously small. Almost all customers are funded by their dealers." In other words, companies are paying each other in circles and calling it growth. Number 3, the debt machine. In 2023, AI companies issued $166 billion in debt to build data centers. By 2025, that number exploded to $625 billion. In 2 years. That's not investment, that's leverage. The kind of leverage that turns a correction into a crash. Number 4, the DeepSeek shock. In January 2025, a Chinese company called DeepSeek released an AI model that matched the best American models, and reportedly built it for just $5.6 million. Meanwhile, American companies were spending billions. The market reacted instantly. NVIDIA lost $589 billion in a single day. The largest single-day stock loss in American history. It recovered. But the message was loud. The assumption that you need billions of dollars worth of NVIDIA chips to build good AI might be wrong. The dot-com comparison. Every time someone mentions an AI bubble, someone else says, "This time it's different." And here is the thing. They might be partially right, but history is worth looking at. In the late 1990s, the internet was real. It changed everything. Nobody debates that now. But during the dot-com bubble, investors were so excited about the future that they paid any price for any company with a .com in the name. Companies with zero revenue, zero profits, zero plan were valued at billions. When it crashed, the Nasdaq fell 78%. Cisco, the NVIDIA of the dot-com era, rose 4,500% before the crash. 25 years later, it still has not fully recovered. 25 years. Now here's the key difference between then and now. Today's AI giants, NVIDIA, Microsoft, Google, actually make money. NVIDIA posted $215 billion in revenue in 2025 with 53% profit margins. That is real. That is not a dot-com company selling pet food online. But here's the key similarity. One researcher called the AI bubble 17 times larger than the dot-com bubble. The Bank of England warned that investors are not being properly warned about the risks. And 54% of global fund managers surveyed in late 2025 said AI stocks were already in bubble territory. Even Sam Altman, the CEO of OpenAI, said in August 2025 that he believes an AI bubble exists. The man running the company at the center of the AI boom is telling you there might be a bubble. That is not nothing. Duo is actually at risk. Here is the uncomfortable part. If AI stocks correct, which historically all bubbles eventually do, who gets hurt? Not NVIDIA's founders. They cashed out years ago. Not the venture capital funds. They got in at $1 a share. Not the insiders. They're on their yachts. The people at risk? The ones who bought in at the top. The 62% of Americans who own stocks, including through their retirement accounts and their passive index funds. Remember what we talked about in the last video? Every time a company gets added to a major index, like the S&P 500 or the NASDAQ, passive funds automatically buy millions of shares. They do not care about the price. They just buy. So as AI stocks kept going up, your retirement fund kept automatically buying more of them at higher and higher prices. The people who built these companies needed buyers, and the passive investment system handed them billions of ordinary people's money automatically, blindly, without a single question. This is exit liquidity. Again, different sector, same game. The fair picture now. Here is where I am going to be honest with you. Not everyone agrees this is a bubble, and they have real arguments. The hyperscaler companies, Microsoft, Amazon, Google, Meta, are trading at about 26 times forward earnings. At the peak of the dot-com bubble, the equivalent companies were trading at 70 times earnings. That is a meaningful difference. AI is already generating real revenue. OpenAI is on track for $13 billion in annual revenue. Anthropic is targeting $9 billion this year. These are real numbers, not just promises. And the technology itself is genuinely improving. AI is being used in drug discovery, climate modeling, education, and scientific research. The internet felt like magic too, and it actually was. Many of today's companies will be the Amazons and Googles of the AI era. The honest answer is, nobody knows exactly where this ends. Markets can stay irrational longer than you can stay solvent, as the saying goes. But the technology is real, has never, in history, been a reason to pay any price. So what should you actually do? Let's be practical. Option 1, do nothing different. If you are investing through index funds for the long term, 20, 30 years, short-term bubbles matter less. Markets recover, they always have. Staying the course is a legitimate strategy. Option 2, understand what you own. If you are actively buying individual AI stocks because your group chat told you to, open the company's financials first. Is it profitable? Does it have real revenue? Or is it burning cash and hoping the hype continues? Option 3, diversify properly. If 30% of your portfolio is in 3 tech companies, because that is what the S&P 500 looks like right now, that is not diversification. That is a concentrated bet wearing a diversification costume. Option 4, think about timing. Nobody rings a bell at the top. But historically, when 54% of professional fund managers say something is overvalued, and the CEO of the most important AI company in the world says there might be a bubble, that is worth pausing and thinking about. The best investors are not the ones who get in earliest. They are the ones who know what they own and why they own it. AI is real. The revolution is real. But so is the money being made by the people selling you the dream. The question is not whether AI will change the world. It already has. The question is, at what price are you buying the ticket? And who sold it to you? Subscribe if you want to keep asking questions nobody else is asking. And drop in the comments, do you own AI stocks? And do you actually know what you own? I'll see you in the next one.